Answer this question of when is the best time to trade, I want to answer it in two ways. Okay, the first one, I want to answer it in terms of trading session as well as the types of traders. Types of traders or the trading styles. Now, when is the best time to trade? We usually say that the best time to trade in the forex market is when you have two or more sessions open at the same time. Okay. Now you see now in the forex market we have four main trading sessions. We have the Sydney session. So let me just go back here. Now these are the four main trading sessions. We have Sydney session. We have Tokyo session. We have London session. And we have New York session. Now these sessions, they are named after major cities in which most of the transactions are carried out. Okay, like Sydney is the capital city of Australia. So Sydney session, it represents Australia and those countries around Australia such as New Zealand. Okay, so when we have Sydney session open, these are the countries that are usually traded most.
Have you heard all the forex hype online? Flashy cars, false profits? Here, we are not about the hype. We are about the skill. Our training is real, practical, and beginner-friendly. We will train you how to analyze the market, risk management, and also how to grow your account step by step. You can visit us at Spar Mall, second floor, S47, or give us a call on our number, which is in all our social media platforms, to book your slot and start your journey to financial freedom.
That has Australia, the Australian currency, or any country that has the New Zealand. Okay. Now we have the Tokyo session. Tokyo session, it is also called the Asian session, and it represents Tokyo is the capital city of Japan. So it represents Japan and those Asian countries. Okay. So when you go to trade when Tokyo session is open, and if you are trading currencies such as JPY, this is the best time to trade it. Okay. Now we have the London session. London session is London. First of all, London is the capital city of United Kingdom, and London session represents the United Kingdom and those European countries. So if you go to trade when you have like the London session being open, and if you're trading a case such as the GBP, the Great Britain pound, or you're trading the euro, at this particular time there's usually more volatility. Okay. Now the last trading session is what we call the New York, and it represents the America. So if you go to trade any kind that has the dollar, this is the best time to trade. Now I have told you that the best time to trade is when you have two or more sessions open at the same time. This is because when you go to trade when you have like two or more sessions open at the same time, at this particular time there is usually volatility. Okay, volatility basically is price keeps on changing in prices. Okay, and for us as forex traders, we shall take advantage of those price changing prices. Okay, so what happens is that when you go to trade when you have this session open at the same time, there is more volatility. Now the best thing about like for us who are here in Africa is that we don't have to wake up so that we can be able to trade in the most traded trading session. Because now the most traded trading session in the market, we have the London and the New York. These two are the most traded trading session in the world. Okay, now the best thing about us is that we don't have to wake up to trade when these sessions are open, because by the time the London session is open, it's usually like 10 a.m. Kenyan time. Okay, the time that the New York session is open, it's usually at 3 p.m. Kenyan time. So for us, we don't have to wake up to trade this trading session. But maybe for someone that maybe is like in Australia, in like Japan, and maybe want to trade this trading session, he has to wake up to be able to trade in this forex market. Okay, so what happens is that, like if you look at it this way, like right now, Kenya, we are 7 hours ahead of the US. You know, so kama saizi ni saa 9 in the US right now, it's at 8 a.m. So, you know, we are also Kenya, we are 2 hours ahead of United Kingdom. So that means that even at saizi ni saa 8, in the UK it's around 12 p.m. So, you know, 12 p.m. So, you know, now someone that is like in Australia, he's like 8 hours ahead of us. So come up if Kenya ni around 3, okay, when around 9 p.m. So, you know, so you see, for these traders, when you want to trade this in the session, I'm to trade like the London session, they have to wake up to trade these two trading sessions. But for us in Africa, we don't have to wake up. Now, another thing is that if you want to see when these trading sessions are open, we have an app called FX Hours. You can be able to see those trading sessions in Kenyan time. Now, I also told you that, so that I'm able to answer this question of when is the best time to trade, I also need to introduce you to this concept of the trading now, the trading styles. Okay, now what happens is that in the forex market, we try to tell people that as we be trading, there will be one strategy or two that we do to identify, and that trading strategy that we do to identify, it will fall in four main categories. It will be for scalping, day trading, swing trading, or position trading. Now, what is the difference between these trading styles in the market? When we're talking about the trading styles in the market, the first one tunasema ni scalping, the other one tunasema ni day trading, we have swing trading, and we have position trading. Now, what is the main difference between these four trading sessions? These four trading styles. Okay. Now, for the scalping, or for trader that has preferred scalping as his way of analyzing the market, is that for this type of trader, he will enter and exit the market multiple times in a day. Okay. So for this type of trader, he wants to take advantage of those small price movement that occurs in the market. So for this type of trader, anatumia like the 1 minute, the 5 or the 15-minute time frame to do his analysis. Now we have this type trading style we call day trading. Now for the day trading, these are type of trading whereby for the trader he will open his trades, but his trades do not run overnight. So he atafungua trades, but by the time zafika midnight, ashafungizo trades. That's what we call a day trader. Now for the swing trading is also another style of trading whereby for this type of trader he can be able to hold trades for several days to several weeks. So for this type of trader, when you swing trade, he can hold trades for several days to several weeks. Now the last type of trading style need to position trading, and for the position trading, this type of trader, he can hold trades for several weeks to several months. So what happens is that as you'll be starting your trading journey, we always tell people that you need to identify or to develop a trading strategy. Now, if you identify a trading strategy, it will fall in these four main categories. It will either to scalp, day trading, swing trading, or position trading. Now, depending on your preference, now that's what you'll be able to focus. You'll be able to focus on. Now, and also how to know if the two sessions are open at the same time. So, if you want to know when these trading sessions are open at the same time, kuna hiyo app inaitwa, go to Play Store, go to Apple Store, kuna app inaitwa FX Hours. This FX Hours, you can able to see this trading session in Kenyan time. So utaweza kujua kama tuseme London session utaweza kuona inafunga at what particular time, inafunga at what particular time, because those trading sessions they usually last 9 hours each. Okay, so we have already known what is forex, what is in the forex market. Now I want to introduce you before we can learn about something very interesting in the market. Let's learn about some terminologies that are used in this forex market. You see, in any field you decide to pursue, maybe you are pursuing law, you are pursuing medicine, you are pursuing journalism, or any field that you are deciding to pursue, there are various terms and terminologies that are used. And those terms and terminologies, they are very peculiar to that particular field. See now, because now there are some terms that doctors will use, and if you are not in the medical field, you will be able to understand, right? There are some terms that lawyers will use, if you are not in that law field, you will be able to understand. See now, there are some, likewise now, even in the forex market, there are various terms and terminologies that are used in this particular field, and these terms and terminologies, they are very peculiar. See now, as well as now, this is why I wanted us to look at some of these common terms, because these are some of the things that you hear me talking about when I be talking about this forex market. Okay, so let us look at some of the terminologies that are used in the forex market. Now, the first terminology that you hear most of the traders talk about, or you hear somebody talk about it so much, is pips. Nani ashasikia trader amesema, if you have ever been maybe in a Telegram group, maybe you have found someone liking 10 pips achieved, 50 pips achieved, this trade I'm targeting like 100 pips. Now, when you hear somebody say that is targeting like a certain number of pips, what does that person mean? So these pips, let's start from the layman's language. Pips is basically change in price, okay? Because pips now, is the smallest unit in which a currency pair can change. Okay? Like, let me give you a very good example. Assuming niko na kitu kama GBP/USD, and it moves from 1 is to 30, 30, 30, iende mpaka 1 is to 30, 50. You see this one is a difference of 20. Now, kwa GBP/USD tukasema GBP/USD imeenda 20 pips, because now pips is changing price. That's one of the terminology that you hear I talk about, or any forex trader that you always hear that forex trader talk about. Now, another term that you hear forex traders talk about is bullish market and bearish market. Okay? Bullish market and bearish market. Let's start from bullish market. Bullish market, it means that the market is going up. Bullish market means the market is going up. So in a bullish market itakuwa ikipanda hivi. This is what we call a bullish market. So if you ever hear somebody say, if you ever hear a trader say that I'm bullish, a GBP/USD has been bullish, it basically means that that currency is going upward. Okay? Now, opposite yake ni term of bearish market. Now, for the bearish market, it means that the market is going down. So when you hear a trader say that this currency is bearish, it basically means that the currency is going down. Okay? So if you ever hear a trader say that I'm bearish on EUR/USD, it basically means that he's expecting that currency to continue going downward. Because now these are some of the terms that you hear. Now, another common term used in this forex market is range in market. We have range in market or sideways market. Sideways market. Now, range in market, it means that the market is neither going up or down. The word is neither. For range in market, it means that the market is neither going up or down. So basically, in a range in market, price is basically trapped in a range. This one is an example of a range in market. I'm going to show you in the forex chart so that now you'll be able to understand it way better. But now, understand that bullish market in a panda, bearish market in a shuka. Range in market, price is trapped in a range. Now, another common terminology used in the forex market is trend in market. I'm sure maybe you must hear a trader say that this currency is trending. What does that usually mean? Okay? Trend in market, it means that the market is either going up or down. The word is either. So trend in market means that the market is either going up or down. So what I mean is that when I come and tell you that EUR/USD is trending, this is a currency called EUR/USD, and I say that EUR/USD has been trending. What do I mean? I mean that that currency can either be going up or down. So that's upon you to go and check. Okay? But if I come and say that EUR/USD has been bullish, I'm specific that it's going upward. Okay? If I say that this currency is bearish, I'm specific that it's going downward. Now, if I say that this currency is trending, it means that now that one you have to go and check, because I'm not specific that it's going upward or downward. Now, this is one of the terms that you hear most of the forex traders talk about. Okay? Now, another thing also I need to introduce you before we can learn even something more interesting in the market is about forex brokers. Let's talk about forex brokers. Now, who is a forex broker and what role does a forex broker play when it comes to the forex market? Okay. Now, let's start from the definition of what is a forex broker, or who is a forex broker. Now, a forex broker is a firm that usually gives us access to the market by providing us with a trading signal. Okay. So what happens is that a forex broker is basically a company or a firm that gives us access to the market. Okay. So that now you can go to have access to the market, you need to go through a forex broker. So, like this is us. This is us. This is the forex broker. And now this is the market. Now, so that you can have access to this market, you need to go through a forex broker. So what happens is that a forex broker will give you access to the market, okay, by providing you with a trading account. Now, because also we have so many forex brokers out here, we have hundreds of forex brokers. Now, how do you usually identify that this forex broker is better than this other one? Okay. Now let's talk now about some of the things that you need to consider anytime you're opening an account with a forex broker. Before now, I can recommend to you the forex broker that I do recommend. You know, and I'm not in any way affiliated to this forex broker. So let's start from what are some of the things that you need to look at anytime you're opening an account with a Forex broker. Now, the first thing you need to look out, the first thing that you need to look out for is that broker regulated, okay? Now, like in the country, here in the country, Capital Market Authority is the one that regulates these Forex brokers, okay? It's the one that is authorized to regulate these Forex brokers. So, the first thing that you need first of all to go and check is that broker well regulated? Because now, if that broker is well regulated, the first thing that you will experience is that you have integrity of your trading experience. Secondly, your money will be secure. So, utakiweke pesa kwa Forex broker and maybe that one is not a legit Forex broker, na pesa yako ipotea. So, the first thing you need to look at is regulatory compliance, whether that broker is well regulated. In addition to that also, this one is an extra tip, ensure that that broker is regulated in other jurisdiction and not only here in the country, but in somewhere like the US, the Australia, the UK, those brokers that are regulated in those jurisdictions, those are like the best ones. Okay, so ukipata like broker ko maybe accredited mahali kama kina Australia, UK, US, those happen to be one of the best brokers in the world. Now, another thing that you need to consider, you need to look at the quality of customer service. Okay, anytime you want to open an account with a Forex broker, you need to look at does that broker have like 24-hour customer service? So that now, in the event I have any question, in the event I have any queries, in the event maybe I have verification issues, in the event maybe I have withdrawal issues, that broker will be very much responsive. So you need to look at the quality of customer service. And the best way ni most of the brokers are easy work on like 24-hour customer service. That's one of the things that was not there. But here to our Forex trading journey. Now, another thing that you need to consider, ukitaka kufungua account with a Forex broker, okay? Look at the trading platforms that the broker is offering. You need to look at Forex broker, lazima uangalie the trading platforms that the broker is offering, okay? Now, this is it. We have different trading platforms, and these are the most common trading platforms. We have MetaTrader 4, we have MetaTrader 5, we have CTrader, we have TradingView, we have this other trading platform. We have others that are called CTrade. We have others that are called TradeRocker. We have others that are called MatchTrader. Okay. So when you open a Forex broker, you need to go and look at does that broker has a trading platform that I'm more convenient with. I'm the one that I know how to maneuver around. So, because now what happens is that when the broker gives you a trading account, akipatia trading account, hiyo account itakuwa na account number, itakuwa na server, itakuwa na password. So these details that the broker has given you for the trading account is the one that usually used to link with these trading platforms so that you can have access to the market. So if you know how to use like MetaTrader 5, you need to go and check does that broker has MetaTrader 5. Now the best thing also is that most of the brokers they have these two trading platforms. They have MetaTrader 4 and MetaTrader 5. These are the most common trading platforms. Okay? So come on, joke to me MetaTrader 5, go and check that broker offer MetaTrader 5. Now there are some brokers that go an extra mile and they have different other trading platforms. Like we have CTrader and the TradingView. So what happens that the TradingView is a trading platform. This one is the most advanced trading platforms in the market. Okay. Now what happens that this TradingView being like the most advanced trading platform, it has some functionalities and features that are not in this MetaTrader 4 or MetaTrader 5. Now for start with this trading unaanza na MetaTrader 4. Those is few years from now it will be phased out, but you can start with MetaTrader 4. And then now the best thing here appear if you know how to use any of these trading platform, going to these other ones it becomes easier. So anytime you want to open account of Forex broker, go and look at the trading platform that the broker is offering. If you are very new in the Forex market, and then MetaTrader 4, that one is like the most basic. Kama utaweza hiyo MetaTrader 4 is like the most basic, or you can start with MetaTrader 5. Okay? And then once you talk to MetaTrader 5, you can now go and trade in this like CTrader and TradingView. Now another thing that you need to consider kufungua account na Forex broker ni the mode of deposit and withdrawal that broker offers. Unataka kuchagua Forex broker that has a mode of deposit and withdrawal that is convenient to you. This is it. Tuseme, like in the country, M-Pesa is the most used method of transacting. So you need to look at a Forex broker. The other broker have like M-Pesa as a mode of deposit and withdrawal. Because now, If you choose a forex broker that has a mode of deposit and withdraw that is convenient with you, you'll be at ease. Like since most of the brokers are like M-Pesa as a mode of deposit and withdraw, M-Pesa is like the fastest one when it comes to withdrawing those amounts. So customer will make like $10, will make like $100, will make like $1,000. You can easily go to access that amount. Okay, so those are some of the things that you need to consider: quality of customer service, regulatory compliance, the trading platforms, mode of deposit and withdraw. You can also look at the reputation of the broker. Okay, tunasemanga mgara muwe lakini haki mpe. So go to like websites such as Trustpilot, go to websites such as Reddit and check how are the people's experiences using that forex broker. Because now if you go to like Trustpilot and then you pattern, the trading experience of other traders using that broker is not that good. Ita kwa kama red flag. Okay. Now I did also promise you that I'm going to recommend some of the forex brokers to you. Now I'm not in any way affiliated to these forex brokers. I don't have anything to benefit. It's just that I just recommend you to open an account with them, because at least for them I've tested and I've tried them. I may not have tested all the forex brokers that are out here, but there are some of the brokers that I do recommend to you as forex traders. Now the first one I do recommend IC Markets. That's one of the brokers. He's based in Australia. The other one I do recommend is Pepperstone. He's also regulated. Actually, Pepperstone is also regulated by CMA. He's based also in Australia. I do recommend SP Markets. So these are the brokers. IC Markets, Pepperstone, kuna SP Market, kuna Windsor Brokers. I also recommend Hot Forex as well as Xmas. Now these are the reason why I recommend these brokers, because at least I have an account with them. I've traded with them for quite some time, and at least for me I feel that they're the best ones. Okay. Also they fulfill most of those. Actually they fulfill all those conditions I've told you about when you need to open accounts of forex with a forex broker. So how will I know that a broker is regulated in like the US? So in the US kuna kuanga na usually ya US inaitangwa ya Australia inaitangwa ISIC. Ya US inaitangwa there's a word that usually call it. Kuna regulatory authority ya US that utaipata. I think as I proceed nikikumbuka I tell you. Yeah. So you have learned about this forex brokers. Before I can talk about the trading strategy. Let's look at the three ways of analyzing the forex market. So let's look at market analysis. Let's talk about market analysis. This market analysis, it talks about the three ways in which forex traders usually analyze the forex market. Any forex trader utapata out here, they analyze the market in three ways. Okay? Now the first one, we call it fundamental analysis. The other one, we call it technical analysis. And the last one, we analyze the market, naitanga sentimental analysis. These are the three ways of analyzing the forex market. Now, any forex broker you meet out there, one is the market in these ways. Anaweza kuwa anafanya fundamental analysis, anafanya technical analysis, or anafanya sentimental analysis. Now, what is this fundamental analysis? Now, this fundamental analysis, we also call it news trading. Okay, whereby for this type of trader that anafanya this fundamental analysis, we want to take advantage of certain price fluctuations that occurs when we have news and economic events released each and every day. So what happens is that in this forex market, there are various news and economic data released each and every day, and those news and economic data usually gives us a glimpse of what the economy is faring, as well as when we have these news and economic data being released, the market reacts to this kind of news. And how does the market react? The market reacts by having certain price fluctuation. As a part of like in a normal day, market can move like 70 pips in a normal day. But when we have this kind of news, the market can move like 50 to 60 pips within 1 minute. So for this type of trader, when you analyze the market using fundamental analysis, you want to take advantage of that certain price fluctuation that occurs in the market. Okay. Now another thing you need to know about this fundamental analysis is that not all news usually moves the market. Okay. We have like the high impact news, we have the medium impact news, and we have the low impact news. Now, for traders, we are more concerned on the high impact news because now these high impact news are the ones that usually moves the market a lot. So these are some of the news you cannot afford to ignore ukitrade. Okay, in the trade a different trade strategy, I'm not trader. These are the news for you as a forex trader, whether you're a beginner or whether you're an advanced trader. You agree with me that these are the news that you cannot afford to ignore. Now the first one, in a tango NFP or non-farm payroll, this one usually released on the first Friday of the month. That's one of the news that you cannot afford to ignore. The other one that you cannot afford to ignore in it. So this news, ya kwanza ni NFP. The other one we have FOMC, we have CPI, we have interest rates, and the other one we have GDP, as well as employment and unemployment rates. This news you cannot afford to ignore. Now the other way of analyzing the forex market ni tunaita technical analysis. Now technical analysis inaongea kuhusu, it basically talks about analyzing this forex chart. Basically, technical analysis is looking at this forex chart, and now analyzing this forex chart. Okay. Now for the technical analysis, for the data that is using technical analysis, he can use different trading strategies. See, another to make it to come support, resistance, candlesticks, ICT, SMC, all those trading strategies to analyze the forex market. Basically, what happens is that this forex market is very, very repetitive, and when you are doing now technical analysis, you are trying to take advantage of those repetitive patterns that occurs in the market. Okay. Now the last way of analyzing the market is sentimental analysis. This sentimental analysis is basically looking at the general market sentiments. What wanasemaje huku hivi nje. Okay. So for data that is doing this sentimental analysis, anaangalia at people's perception about economic forecast and using the social media to analyze the forex market. Okay. Now the most common way of analyzing the market needs to be if fundamental na technical analysis. These are the most common ways of analyzing the forex market. For us here, in this session, because now we'll be having this beginner trading session each and every Friday, we'll be focusing also on the technical, as well as I'm going to show you how you can go to trade this news. You know, one of these, I think, as of next week, when we'll be covering this market analysis, how to trade the news, how you can easily go to. I'm going to show you a very simple trading strategy you can use to trade the news. Okay, and then now we shall also now be focusing on the technical analysis. Now, let me first of all answer some of the questions that you may have. So, kuna mtu amesema, how do I read the candlesticks? That's a very good way. That's a very good question. I don't want to read something very small about candlesticks. Before now, we can see something. I can teach you about something that I prepared for today. So, candlestick is one of the, when you do talk about technical analysis, say technical analysis is a study of the chart. It's basically looking at this forex chart and predicting future price direction. And one of the ways you need to you can go to analyze this forex chart is through the candlesticks. Okay. Now the candlestick is usually a visual representation of the market. And when you talk about the candlestick, there are various things that you need to know about the candlestick. One of the things is that easily to the right and agrees the tangle of the candlestick. That's one way. It's one of the ways of viewing prices. Because now, in the forex market, we'll view prices in three ways. One of them in tangle candlestick. The other one in a kwanga through bar chart. This is another way of viewing prices. Sorry. These are another way of viewing prices. And the last way of viewing prices in a kwanga, the range chart. However, the candlestick is usually the most common way of viewing the prices. Okay. Now, there are some key things I want you to note about the candlestick. Is that each and every candlestick you see, it shows you how price change within that specific period of time. So what I mean is that if I'm using like the 1 hour time frame, that candlestick on the 1 hour time frame, it is showing me how price change within that 1 hour. Okay, if I'm using like the daily time frame, that candlestick, it is showing me how price change within the whole day. Okay. Other thing is that each and every candlestick you see in the market, it tells you a story, and it tells you a story between the buyers and the seller. Whereby in the forex market, the buyers and the sellers are always trying to fight for control, and whoever wins between the buyers and the sellers determines the kind of candlestick will win. That's why if there are more buyers than the sellers, the price will always move up. If there are more sellers than the buyers, the price will always move down. Okay. Now, We have two types of candlestick patterns. We have a bullish candlestick and a bearish candlestick. Now for a bullish candlestick, let me just break like this one. Now before now, we can talk about a bullish candlestick. This is what I want to note. The current region of a candlestick, this one, we call it the body. This protruding lines is what we call the wick. So it will attack wicks. This one we call it the body. Now we have said that we have two types of Japanese candlesticks. We have a bullish candlestick and a bearish candlestick. Now for the bullish candlestick, it comes from the word bullish market, meaning that the market is going upward. So for a bullish candle, the market usually open on a low and closes on a high. So how do you interpret the formation